The next panel is going to touch on some of those things. It's going to talk about how to string lending protocols together. It's going to talk about how to string DEXs together. It's going to talk about how to string different chains together. And that's what I find personally exciting about all this. So do be looking for that. I hope actually out of the discussion that the panelists have had backstage for the last 10 minutes or so, they're actually thinking about how to compose their projects with each other, which would be even more interesting. You're welcome to come up on stage, and we'll give you a little extra time if you're ready. But looking forward to a wonderful panel.
Well, incredibly excited to be presented to your wonderful community. My name is Yorgos. I'm co-founder of Axelar. So what is Axelar? Axelar was created about 4.5 years ago to solve a big problem in the blockchain ecosystem, namely the problem of fragmentation. In a world with hundreds and maybe thousands of chains, the user experience today is very fragmented. Users need to have multiple wallets. If you want to use an application on one chain, you have to bridge over, change your wallets, take 3 or 4 steps to use an application. And Axelar was built to abstract all of those complexities away. So the end state of blockchain is one where, as a user, you will be able to have a wallet with your assets and applications, and just say, I want to use my asset on X application, not have to worry about the chain on the back end at all. Right? So we're completely abstracting away the chain. Today, Axelar is the only decentralized interoperability solution in the market. Every other solution out there is fully custodial, and we're connecting 69 chains. But let's talk a little bit about how Axelar can benefit the Cardano ecosystem. The first use case will be bridging over new types of assets to Cardano. Most interesting ones are the big assets like Bitcoin, Ethereum, and stablecoins. And the stablecoins are particularly interesting because those stablecoins can launch native on different chains. Just to give you an example, Axelar was the canonical interoperability solution for the Cosmos ecosystem for a long time, and we bridged over USDC to that ecosystem because they have no stablecoin after the Terra collapse. Once USDC got close to 100 million in TVL, Circle looked at it and was like, OK, there's a lot of demand for USDC on that ecosystem, so we should now launch natively. So by working with your community, building up the TVL for stablecoins or Cardano, we should be able to motivate a company like Circle to come over and launch natively on the chain. Number 2, there's so many ADA holders in the world. Right? It's one of the biggest assets in the space. And DeFi is just now launching on Cardano. We'll talk a little bit about it on the panel. But there's also a lot of DeFi applications on Solana and Uniswap. Through Axelar, if you're an ADA holder, you will be able to take your ADA, bridge it over to any big DeFi application like Aave, get a loan, use the asset productively, and earn some yield at the same time. Or you will be able to restake the asset to secure other applications and again earn yield on your ADA, making it a productive asset. Right? So that's something that will be available to all ADA holders once the integration goes live. Number 3, through Axelar, you'll finally be able to onboard users to Cardano from any of the 69 chains that are today integrated with Axelar. And here, I'll just present quickly what the user experience is going to look like. Oh, I think, OK. So we cannot present the video here. But effectively, you will be able to go to any chain, let's say Ethereum mainnet, pick an asset on your wallet, any asset, let's say ETH. Then you would connect your Cardano wallet, pick any asset you want to receive, let's say ADA. And through this interface, you will be able, in less than 20 seconds, from any chain, swap any asset you want to any other asset you want. So this really enables users from any chain with one click and in less than 20 seconds to onboard to the Cardano ecosystem and use any of the interesting applications that are live in the ecosystem. And finally, number 4, institutional initiatives. So just to give you some context, with Axelar, we've been doing a lot of work with various banks and financial institutions. Just a few examples here on the slides. Deutsche Bank, JP Morgan, Microsoft. These are all companies that we've done work with in the past. And many of them have their own blockchains. And the initial initiatives that they're interested in deploying are some kind of cross-chain swap with some public blockchains. And typically, the blockchains they pick are blockchains that already have interoperability. And these are typically blockchains in the Ethereum ecosystem. Right? We've seen ZK Sync, Arbitrum, or the Ethereum mainnet being deployed often for such initiatives. Now, with Axelar launching our Cardano, this gives an opportunity to the Cardano community to also participate in a lot of those initiatives, because finally, institutions will be able to connect their own chains to Cardano, take an asset that's deployed on a private chain, bring it over to the public Cardano chain, or allow some kind of interesting like cross-chain swap, which is the equivalent of a DVP transaction in the institutional space. So we're very looking forward to working with the Cardano community and bring them closer to some of the institutional initiatives that we've been working on for the last 2 years. So that's all. Thank you so much for listening to me. If you're a user, stay posted. We're going to be launching very soon. We're waiting on some dependencies from the Cardano ecosystem. Once those are live, we should be able to deploy, and you will be able to use the application. If you're a developer, there's a lot of kinds of integrations we can do together with Axelar in the ecosystem, so please reach out. You may scan the screen. I'm available on Twitter. I'm always available over DMs, so please reach out, and really looking forward to building with your wonderful ecosystem. Thank you very much.
For the intro. Hello, everybody. Can you guys hear me all right out there? Thumbs up, thumbs up. Excellent. Would love to see. I know those guys. Well, thank you all very much for being here today for this very special panel on DeFi. And thank you very much, Georgios, for the introduction and the announcement about the integration between Axelar and Cardano. Super exciting for what this is going to unlock for the entire ecosystem of all of Web3 and for all of the various ADA holders out there in the audience today. But we've got a lot to get into in a fairly short period of time. And we've been talking in the backstage. We're going to try to keep this as high level as possible for all of you, because otherwise us eggheads could probably go a little bit too deep into the trenches, so we don't want that. So we'll keep it approachable for all of you. But yeah, we're looking today at what is possible, what is next in innovation related to DeFi. And so with that, I'd actually like to turn it all over to all of you guys to kind of give a little bit of an introduction about yourselves and what you're currently building on. So yeah, not to put you on the spot, but Max, you ready to go?
No, that's fine. I'll get us all started. So hi, everyone. I'm Max, also known online as Zygo Meb on Twitter, and I'm here for Optim Finance. I'm here to discuss the possibilities of integrations between ourselves, Fluid, and Splash in our new and upcoming products together. So that's it. Thank you.
Hi, everyone. I am Raul, co-founder of Fluid, and today we're going to speak, I'm going to personally speak about what's coming up for Fluid, what's the new lending protocol, and why we are building on Cardano, what are the possibilities to allow not just users, but even protocols to use our lending platform.
Hello everyone, my name is Ilya Oskin. I'm co-founder and core developer of Splash protocol. It's a DEX that allows to aggregate liquidity across multiple access, time, volume, and transactions. Yep, that's it.
Very good. And you guys, you know Georgios over there. Thank you very much again for introducing yourself, and we'll pull it all together here in a moment. But yeah, well, so I guess kind of like getting right into it, you guys had mentioned that there is a new kind of partnership in the works between the three of you. And so kind of like high level, what is that partnership and what are your individual contributions to this?
Okay, we could get into that.
Oh, okay.
And I think that's the second part.
Okay.
So I think what we should start with is getting into setting the stage. So let's set the stage first before we get into the fun stuff.
All right, so this
setting the stage.
Version 1 DeFi, version 2 DeFi.
Exactly. So
okay, here we go.
Who here has heard of the term Cardano DeFi 2.0? Nobody. So somebody heard. Somebody there. Awesome.
One.
So to set the stage on that, and it's an initiative we've been pushing for quite some time now. There is a problem in Cardano DeFi specifically, what we're labeling Cardano DeFi 1.0. This problem boils down to the fact that apps cannot talk to one another. Interoperability just doesn't exist. DEXs gate-kept themselves in their own little walled garden of closed batchers, and this disallowed any potential for interop and composability with them and other apps. Liquidations, swaps, just doesn't work. You cannot make good composable DeFi without open batching, without access to pools. And this is the core issue that Cardano 2.0, with its focus on interop, composable apps, and the power that it brings to Cardano and empowerment to the users is all that we're about, really. And this collaboration mentioned is the highlight of this, as it's, well, it's already live between ourselves and Splash on mainnet. First actual adapt to app on Cardano, talking in an interoperable, composable way, and soon expanded between us all three through Oeda, our flagship product nowadays. So,
yes, as Zygo was mentioning, with DeFi 1.0, what do we find out? We find out that who is the user able to interact with the apps or dApps? Well, mainly customers, users with their wallet, with the pop-up wallet, mobile wallet, they interact with it. However, in this case, we are isolating another type of user, projects, DAOs. In these years, they have been able to collect funds, treasuries, but how can they manage if they cannot interact with dApps? So, while we are building on Fluid, our new smart contract development, we had this in mind, and we wanted to allow any project to use our platform, not just users. In this way, protocols can deploy liquidity in an easy way without having to rely to someone in the middle to interact with the dApp for them. And this is very important because they finally can use their liquidity, get yield on top of that, and not just that, handle liquidation, handle the terms of their own liquidity. This is really what DeFi is about. It's not just users that can interact with dApps, but it's dApps that can speak with dApps. And this is a great example of partnership, and probably I'm really bullish on it and can wait to see it on mainnet.
really bullish. That's good. That's good.
Yes, so there are three axes we can improve this decentralized finance products currently. The first axis is creating new financial primitives, new products by composing different applications, by interacting with the macro ecosystem DeFi products exist within. The second axis is like a core part of the story. It's about strong guarantees, non-functional properties of the system like speed of execution transactions, fees that are taken from user for that execution, so cost of execution. And the third axis is like social impact that the adoption of these DeFi products, new primitives, brings to the society. So what Zyga is talking about now, it's like a core access where we can improve on interoperability and also bring new products to market by composing different DeFi primitives. So we as DEX, of course, optimizing on all of that access, and our focus is to attract more liquidity, so we make our protocol as open as possible.
Yeah. Very good, very good. Well, so on this, and I'll have like kind of like a new question actually kind of for all four of you, but I'll shoot it over for Georgios first, which is, I guess like in this kind of talk, we're looking at almost like micro and macro factors within kind of like layers of DeFi, right? Some within like the confines of Cardano, and then like the larger scope outside of that. And kind of like for you, Giorgio, it's kind of like looking ahead, kind of cross-chain in terms of innovation. What do you think are going to be some of the most like interesting vectors for DeFi in 2025 and then beyond, even like say 3 to 5 years from now?
Well, first of all, I mean, a lot of these things I'm hearing about for the first time as well, so thank you so much, learned a lot. And I'd like to draw an analogy with what we saw in the Ethereum ecosystem back in the day. Right? There were all these like isolated DeFi applications, but DeFi and DeFi Summer didn't pick up on Ethereum until you had this interoperability, composability between the applications, right? And people could actually start doing interesting things. And it sounds like we're at the same stage with Cardano DeFi, right? And like it's about to take off, but you need the infrastructure. So from my side, just more of a macro perspective, what's exciting around DeFi, to me, like DeFi has always been the main use case for crypto, right? Bringing RWAs on chain, making those assets available to billions of people in the world that don't even have access to a banking account, right? And step one is bringing them stable coins. Step two is bringing them savings accounts, which are the tokenized bills projects that have started to launch over the last year, including BlackRock's Beetle project, right? And then the third step is giving interesting financial primitives on chain so that people who just don't have access to the banking system can take loans and do interesting things like that, right? So I feel like the infrastructure is at a good place. And now it's not about so much innovation, it's more about getting all those interesting tools in the hands of all these people in the world that just don't have access to them.
Yep, yep. And so I guess that'll come back to something I wanted to talk about, which I guess related to education, right? We've built these tools, but now we need to educate people about it. But yeah, that's a whole other topic. But I just want to maybe throw it back to Ilya. So for yourself, like, is there now, like in your own mind, what would be some of the major roadblocks to seeing further adoption of Cardano DeFi? And can we resolve some of those roadblocks, like here today at the summit? Are these like smaller issues or?
Yeah, it's a good point. Good question, Sheldon. So yeah, our main goal as developers of these products is to give users all the tools so they can seamlessly evaluate all of their assumptions about the products they are using. So they are clearly understandable by users, and users feel safe in that environment.
Yeah.
That will bring like a user closer to these products and help to adopt these products in the everyday usage.
Yes, probably the question I ask to myself every time I see the development of Fluid in this case, our DApp, I always ask myself, can my father use it? Will my mother understand how to use it? And if the answer is no, well, we reiterate and make it easier, simple. Then the ultimate challenge is my grandma able to use it? Yeah. And usually the answer is always no, but still, that would be the ultimate goal for every DApp, like make it super simple that anyone could be onboarded easily.
Oh yeah, I can relate to the simplicity. That's been our chief goal with OADA and with OUSD. Just make it as simple as possible. I mean, you go to the app right now, and you press one button, you press two buttons, and you're done. That's how you use it. You mint, you stake, and you earn. That's as simple as it gets. That's exactly the kind of product we created. Just like as simple as possible. Because our first product was like super advanced. Like, yeah, you issue loans. Here's 50 different terms that you have to do. Just like, yeah, that's the size, that's the duration, that's the interest rate that I want. And actually, by the way, do I pay the interest in advance? How much in advance? And people just got confused by all of those parameters quite a lot. And despite all that, and how you guys improved on the UX with like boosted stake, we saw a tremendous amount of usage of it, despite all those hurdles. So there is real demand for products in Cardano.
Exactly.
Yeah.
But those products need to be easier and easier to use. So that's what we're doing here with OADA, just putting this in, and all of this magic complexity happens in the background through the magic of AMOs and controllers. So yeah.
Well, and so now kind of like, and it's a topic that's come up quite a bit previously, and I don't know if we're actually over it. And that's actually why I wanted to sort of say it's the topic of security. Do you think we're now in a spot where we can kind of comfortably say, like, hey, our bridging, our DeFi, it's fairly secure, right? We've seen, oh, I'm not too sure about that face.
Is it secure? It's secure enough, I'd say.
Okay, well, there you go,
everybody on Cardano is trying to take best precautions to not implode their systems. But as with all things, there's not years and years of track record. At most, it's months, maybe over a year, as for some, to like prove themselves, and how much proving themselves do you need? There's been plenty of hacks on Ethereum that it's like, yeah, there's been like slight loss of precision in a concentrated liquidity pool, and like 5 years down the line somebody found that out, and it's like suddenly drained all the pools. I forget the protocol was that. Do you remember that one?
There's so many of them.
No, but there was like one in particular that was like super small loss of precision in concentrated liquidity pools, whatever. But there was something like
curve.
that. No, it wasn't curved. It wasn't curved. That was a different one. But curve also had a one.
There was an accumulation of error.
Yeah. But anyway, so things like that just can happen, and everybody just looks at it and it's like, yeah, that looks good. Everybody just like runs tests and yeah, that's good, And that's always been kind of a focus of Cardano, like high level, to make it possible to formally verify things. We haven't seen a lot of that in Cardano, or really at all, yet in the dApp space, but that's like the next level in terms of security that this could be taken in. Yeah. And it's not like the foundations have been completely dropped. It's just that this framework for dApp developers to actually go down to the level of, okay, let's formally verify that, has not yet been properly built up. So as far as, is it secure yet for, full-fledged adoption? Yes. It is. By all means, it is. As far as industry standards go, absolutely fucking yes. That's all I'll say. But is it like, oh yeah, academically we can prove things are correct, secure? No. But that's a standard of platonic ideal that just isn't realistic for dApp developers, for anybody actually using those things. So.
I would say also that considering that UTXO ecosystem, Cardano ecosystem started to grow and develop DeFi after Solidity, after EVMs, we were able to catch up and understand what were the mistakes that were made over there, have precautions in order to avoid possible losses. And the ecosystem has been pushing a lot in order to open source contracts in order that everyone can actually verify, check and do. I think that it's a really mandatory steps, and we have seen projects doing even double audits, not just one audit, double audits in order to double check and having different views on the same code. And it's very good for the ecosystem this, because every other project, every new developer can come, see the audits, what were the issues that were found, and build on top of that. So maybe this new project will find out new bugs during this iteration of audits and so on. And essentially what it will help is to increase the security on the Cardano ecosystem.
Security audits and formal verification. Formal verification is on the idealistic end of spectrum. Security audits more like a more practical approach to technical, like finding vulnerabilities and fixing them. But there are also another aspects of overall security of DeFi products, because DeFi solutions are becoming more and more complex, and so they create a lot of meta layers. So you have these layers that, for example, serve execution of orders, and there are another set of guarantees appears on that layer. Who will execute orders? Who guarantees that they are executed in the right order? Who guarantees that there will be no parties that will extract some value from that process? So we as an industry, I guess, should focus on refining that microstructure of that system, so to give like a consistent structure of these protocols, consistent guarantees, so more serious players can trust that environment and come into it and play.
Atomicity. That's exactly why OADA works. That's exactly why OUSD will work, because we can guarantee the execution atomically within the same transaction of the orders that we create. Inspect them and not rely on batching servers being like, maybe I'll execute you in 5 minutes. Or MEV you. No, we inspect it, we deposit, we see exactly what we get, and we verify it. It simplifies the code, it makes it more secure, and everybody's happy as a result.
Sounds marvelous.
It is really marvelous. And without it, we would have, probably spent like at least 2 more months in development alone, just like dealing with the assumptions of, for example, trying to push it through to MinSwap or Sunday or whatever else that has this sort of centralized batcher in the middle that we're forced to go through.
Yeah.
This, from a practical side alone, just cost reduction is sufficient to make it worthwhile. Just that alone.
Well,
Not even to mention security, which is the biggest, really, factors that it should be.
Well, so
but we like money.
I'll come back to this conversation because I do want to ask about like where we go from here on stage, the three of you talking about how it will be applied, kind of like DeFi 2.0 across the rest of the Cardano ecosystem. But before we do that, I do want to actually throw it back over to Georgios there and talk about security once again, and kind of like your own take on it when looking at like the larger kind of all of like Web3 interconnected through your bridge system there.
Well, from a macro standpoint, we have to appreciate that we've come a long way.
Yeah.
Back in the early days of Ethereum DeFi, there was like 2 hacks every week or something like that, right? Yeah. And now it's once in a blue moon, and there are all kinds of precautions so that even when there is a hack, like the damage is limited, right? So this is great. The technology is maturing very, very rapidly, right? Because we're only, 3-4 years away from the beginning of DeFi on Ethereum. Now, the other topic is cross-chain security, right? And that's more top of mind for a lot of people because billions of dollars were lost in the last 2 years, not in just one hack, there were many of them.
Yes.
So what happened there is that a lot of the early bridging protocols were fully centralized. You had these teams that were saying, well, you can bridge assets from one chain to another or pass messages, and they were all claiming their protocol is decentralized. But what was actually happening, there was a founder behind the scenes who was holding some key somewhere, and they were just passing funds from one chain to another, and it was a fully centralized honeypot. And virtually all of them, inevitably, when this one key got compromised, all the funds disappeared, right? So with Axelar in the early days, and at this point, it's been running in production for almost 3 years, and it's been fine. But in the early days, we had to make the decision of, do we go to market fast and like capture market share, or do we spend 2 years to build robust infrastructure and then go to market? And for us, it wasn't really a decision. Me and my co-founder have very deep technical backgrounds, both from MIT, who were part of the founding team of Algorand back in the day. So that was the time when Cardano was doing a lot of that research from consensus as well. And we decided, okay, we'll just spend 2 years. Probably no one will know about us for 2 years. We'll build the infrastructure. It's going to work well. And then we're going to scale it from there. It was very painful to see all those other people just launching things and just going to market. But eventually, it paid off, right? And we're at the place where we can scale to all the ecosystems, 69 chains today, no security issues on the messaging layer. And we also have, as a final interesting piece, in addition to the decentralized infrastructure, which is very important for security, there are also several backstops, like rate limiters, so that even if something goes wrong on a chain, you can cut off the connection to that chain and really minimize the damage, right? So there's multiple layers of security that can prevent worst-case scenarios.
Very good. Very good. Well, yeah, so it is quite exciting now here where we're seeing like the various levels of DeFi. It's all coming together. We're in a really good spot. So kind of like going back to that question that I kind of like trailed off on, but want to pull it back to, like talking about like Cardano DeFi 2.0. And so where do we go from here, and what will it take to get the rest of the ecosystem on board? Because I think we've all kind of, realized you can't get everybody converted on the first day. There is some like delays here. Is this going to be something that you think will pick up quite quickly?
Quickly. Well, it's a relative term, first of all, right?
True.
But as far as like things that have product market fit, which is what we're doing, we've seen a remarkable pace of growth. Like we've launched OADA mainnet 3 months ago, and it's grown to 24 million, almost 25 million ADA in TVL in that span of time. If there's a good product that people want, people will use it.
Yep.
And products that utilize those connections will be inherently and strictly better. So it's only a matter of time if Cardano goes the places that we'd like it to go.
It will go.
And it will go. then obviously the products that are strictly better will do better. So as a matter of time and pressure, products that want to remain relevant will be forced to adopt this mentality, will be forced to adopt. And if they don't, they'll eventually be left behind. And it's only a matter of time that they, just are put in a situation when they just have to say to their users, no, actually, we can't use this wonderful new product. No, we can't provide leveraged LP. No, we can't provide leveraged farming. No, we can't provide leveraged trading. No, we can't do that. No, we can't connect to those pieces. Oh, well, because why? Because we were greedy early on, and we refused to adopt.
Yeah.
So if that's a decision that is made, by all means, go for it. just try and hold on to the last straws of power that you have for who knows how long. But ultimately, I'd like to see all products just come forward and work together on creating an ecosystem in a space with very few builders, really. Like, we all know one another. In a space like that, I'd like to see everybody just kind of come together and work on creating an ecosystem that is able to stand on its own.
Yep.
Which is all this is about, really. If we can't stand on our own, if we can't talk to one another, if we can't come together as an ecosystem, then we, are not going to be relevant for very long.
Well, and this is like, I realize we've got like a little more than 5 minutes left, but wanted to talk about actually like liquidity, right? And yeah, spicy, right? Because obviously liquidity, as you all know in the audience, everybody in Cardano, it is like a bit of a topic, right? There's questions about, do we need to go out and source liquidity from other chains? Do we work with partners like Axelar and go and
I mean, we need assets like that.
Well,
we need assets.
For sure, but then is there also a question of getting those already in Cardano more active, right? Do we have unperforming ADA that should be the first target? Or is this?
Yes, certainly we do. Like a lot of the ecosystem, I'm sure everybody has seen it in Cardano, that there's a lot of ADA that just sits on the sideline, stakes, does nothing. I mean, that's kind of our spiel with Optim. I'm taking too much of a spotlight here. But that's kind of our spiel with Optim to just activate it via ADA. Just like, hey, instead of staking, push it into the protocol, and it will activate it, and then there will be operations made through the system in a very well-defined way that help boost the Cardano ecosystem's growth via loan origination, liquidity provision, and volumes.
Yeah.
That are being generated by the use of that app. And on top of loans...
No, yes. What I would say is that as you were mentioning, Sheldon, there is a lot of liquidity that is sitting there, just staking, sometimes even not staking, just there. And the question is, how come? So what are people doing with their ADA? How can we incentivize them, or at least show them the path? Where usually when you ask users to use their wallet to connect to another dApp, that's already a step forward. Like, they have to close their wallet, check the dApp, connect. That's already too much for some users. So what we are trying to push, we have been talking about dApps that should talk with dApps, and we should say also wallets that talk with dApps. Users should be able to connect and do the DeFi stuff directly on their wallet. This way, it's even simpler for them. Okay, this is my wallet, this is my fundings, I can stake it, but I can do much more. I don't have to connect to another interface and so on. I can do everything here because I'm comfortable on my wallet. I feel secure when I'm using my wallet. And that should be the next step. dApps that speak with dApps, dApps that speak with wallets.
Yeah, so as a DEX developer, I very like to see that projects like Optim are utilizing properties, features of the macro ecosystem. For example, they utilize well-defined ADA staking system, and they pull liquidity out of this macro environment that our products exist within. Because in terms of, for example, trading volume, I think the canvas of competition between DEXs became more healthier with the appearance of DEX aggregators, because now this happens like organically, automatically. Those algorithms just route trading volume to those DEXs that do their job best, better than others. But on the liquidity side, we still have to attract liquidity from liquidity providers, and we like to see protocols that bring liquidity to a DEX, and DEX becomes like a service layer. It's not no more like a user-facing app. It's a service layer for more higher-level DeFi protocols built on top.
Yeah. Okay, and so now, Georgios, last question for you. On the topic of liquidity, you saw before you had mentioned some big institutional partners talking now with yourselves there at Axelar. Are big institutional players coming into the DeFi space? What does the future hold for institutions as it relates to DeFi? What's your thoughts on that?
I think everyone will come to the DeFi space, right? Again, we see BlackRock, the biggest asset manager in the world, tokenizing on a public ledger. And if you look at any technology, not just crypto, on a long enough time horizon, the market converges to the best technology, right? It will remove inefficiencies and will use the best technology. So to me, it's only a question of timelines, and our job is to accelerate the timelines, but everything is so much easier to do on-chain. Everything is composable now on Cardano as well. So it's inevitable, right?
Is that the reason for the name Axelar?
That's a longer story for another day, but it has to do with acceleration, accelerating something else, but we're accelerating adoption as well, so it fits.
It all comes together. Well, guys, we are at time, and so I want to thank all of you for being here today on the panel. It's been wonderful. I think we've actually gone and covered quite a lot of DeFi. I also want to thank everybody in the audience today. Thank you very much for tuning in and being passionate about DeFi. So with that, we'll close it out, and thank you all again today for being here.
Thank you, Sheldon.